Yes, students, in this video, I will be covering the GST amendments as applicable for September 2025 exams from ICAI material. That is from the latest edition of ICAI material in GST, guys. At the end of the respective chapter, ICAI has mentioned the amendments as applicable for September exams. So I will be covering those things in this video. If you observe, the amendments are not there in every chapter. Whichever chapter the amendments are there, they would have given it in the last part of the chapter. That is for 1 or 2 pages. So for the better understanding of the amendments, what I have done is, I have compiled all these amendments chapter wise, which is around 19 pages, guys. That is from the ICA material itself I have taken, but I have taken only the amendment parts and I have compiled the file, which is for around 19 pages. And also, I have made the reference material for amendments connecting to my provision book, in which I have highlighted the amendments in red color. You can just observe whatever is the amendments. I have just highlighted in red color. The content, whatever is there in the black color, don't worry about it, guys. I've just taken it here for reference. Whereas I have also mentioned the page number. You can observe here. That is where the topic is covered in my provision book. So you guys better keep your provision book along with you while watching this amendment video, guys. Fine. So with this clarity, let us begin discussing the amendments. So the first amendment is with respect to chapter 2, guys. First amendment is with respect to chapter 2. But before I start, I will just read out whatever is the clarification given by the ICAI. Let me just read it out. Amendments made via the Finance Number 2 Act 2024. The Finance Number 2 Act 2024 came into force from 16th August 2024. However, most of the amendments made under the CGST Act and IGST Act, while the Finance Number 2 Act 2024 became effective subsequently from the date notified by the central government in the official gazette. In the table given below, the amendment in Schedule 3 of CGST Act 117 by the Finance Number 2 Act 2024 has been elaborated. Why number 2, guys? As I already mentioned you, hope you remember, in the year 2024, there were two Finance Act. One was before the election, one is after the election. That is once the new government is formed. Okay. Since this amendment has become effective from 1st November 2024, the said amendment is not applicable for May 2025 exams. So whatever amendments I am covering now are those amendments which was not applicable for May but is applicable for upcoming exams, that is September as well as Jan exams, guys. However, the said amendment is applicable for September 2025 and January 2026 examinations. Therefore, students appearing in September 2025 and January 2026 examination should read the amended provisions given hereunder in place of related provisions discussed in the respective chapter. Okay. So the first amendment is with respect to Schedule 3, guys. So for Schedule 3, they have added two new paras, para 9 and para 10. So you can observe here. I will just show. Section 7, subsection 2, read with Schedule 3, which talks about negative list, guys. It already had various items. Now two more item has been added, para 9 and 10. Sir, what about 7 and 8, sir? Guys, 7 and 8 is a part of Schedule 3, but it is not covered in intermediate syllabus. So you need not worry. So whatever new items is added now, that is 9 and 10, is it a part of your syllabus? Yes, it is a part of your intermediate syllabus. Okay. So let us understand what is it. But before that, guys, so this amendment is actually relating to co-insurance and reinsurance. First, let us try to understand what is co-insurance and what is reinsurance. Then it will be helpful for us to understand the amendment. So they have given you under para 9, they have mentioned what is co-insurance. Let us see. Co-insurance is a practice where multiple insurance companies, that is two or more, jointly cover a single insurance policy. So they are jointly covering one life insurance policy or general insurance policy. Yes. Instead of a single insurer bearing the entire risk, the risk is shared between whom? Two or more insurers. That is why they are using the word multiple insurance company in the first line, called co-insurers. So that insurance company, whoever is accepting the risk, we will call them as co-insurers. In a co-insurance agreement, each insurer agrees to cover a specific percentage of risk and in return receives a corresponding percentage of total premium. Means they will share the risk and also they will share the premium in proportion to their risk, guys. One of the co-insurer is designated as what? Lead insurer. He is the one who is managing everything. Okay, even though the risk is accepted by two or more insurance company, one of them will take the in charge. Okay, that insurance company is called lead insurer. The lead insurer is responsible for managing the policy, handling the administration such as claim processing and communicating with the insured. Insured means the person who has taken the policy. The lead insurer collects the total premium from the insured and then apportion the premium between the co-insurers, that known as co-insurance premium, based on the respective shares of risk along with paying applicable taxes. Okay, sir. So who has the responsibility to pay GST is the lead insurer. On what amount, sir? On the entire amount of premium what he collect from the insured. Na? So lead insurer is the one who is liable to pay GST on it. Later, after paying GST, he can share the premium with the co-insurer. But before paying to him, he is the one who is liable to pay GST on the entire premium amount. Okay, sir. So I have also made one chart for that. Okay, look here, guys. And if at all, if you want the soft copy of this amendments, it will be available and on our website under free resources. You can download and make use of the same, guys. Yes, sir. Sure. Chart on co-insurance. Now assume Vikas took a insurance policy on his assets, that is general insurance, which is co-insured jointly by. Okay. So there are two co-insurer. Who is it, sir? SBI and ICICI. So I have taken the policy with two insurers jointly, not individually, separately. I have taken it jointly. Okay. So both of them bear the risk, sir? Yes, both of them will bear the risk. But let us consider SBI as the lead insurer. He is the one who is managing all the things, the administration, everything, claim processing. So lead insurer is SBI in my example. Collects the total premium and apportion with whom? Co-insurer for their share of risk. Means Vikas will pay the entire premium to whom? SBI. And SBI will keep their share and give the remaining share to whom? ICICI for their risk. Okay. Now, SBI is liable to pay GST on the entire gross premium, whatever they are collected from insured. That is Vikas. Okay, sir. Coming to ICICI, co-insurer. We call them as what? Co-insurer, who has jointly accepted the risk. Receives the share of premium from whom? Lead insurer. Will Vikas pay to the ICICI directly? No, no. Vikas pay the entire premium to whom? SBI. Okay, sir. For their share of risk, they will receive the premium from who? From the lead insurer. Okay. Are they liable to pay GST on whatever amount they receive share of premium from lead insurer? No, they are not. Because the lead insurer would have paid the GST on the entire gross premium which they have collected from the insured. Okay. You can see not liable to pay GST on the amount of co-insurance premium received from lead insurer. This is what is covered now in Schedule 3. Should they pay GST again? No, because on the entire gross premium, they have asked lead insurer to pay GST, guys. Let me explain this with some numbers. Listen, listen. Assume Vikas took a policy with jointly with both SBI and ICICI, but he is paying the premium full 10 lakh. 10 lakh is a premium in a year. To whom? SBI. SBI has accepted 60% risk and ICICI 40% risk, guys. So what should SBI do is they have to pay GST on entire 10 lakh. Who? SBI. They have to pay GST on entire 10 lakh and give the share to ICICI. Now, what is the share of ICICI? It is 4 lakh. 4 lakh. For 40% out of 10 lakh, 4 lakh will go to ICICI, guys. How did we get 4 lakh? It is 10 lakh into what is the share of risk of ICICI? 40%. So on 4 lakh, whatever share of premium which ICICI is receiving, should they pay GST again? No. It is a part of Schedule 3, guys. It is a part of Schedule 3. Hope you got it. Clear? Yes, sir. Now, whatever GST will the SBI, that is the lead insurer, pay, on entire 10 lakh they will pay. Can they collect on 4 lakh the GST from the ICICI? Yes. See, actually what happens is, on entire 10 lakh, whatever lead insurer is liable to pay GST, they charge GST to Vikas and collect it from him only, because he is the one who is the recipient. Okay, that happens. Whenever the supplier is liable to pay GST, he will charge and collect it from the recipient. Hope you understood. So as per my example, on the entire 10 lakh premium, lead insurer, that is SBI, is the one who is liable to pay GST. And whatever share of premium received by co-insurer, that is ICICI, should they pay GST again? No. It is the part of Schedule 3. Again, they need not pay GST, guys. This is what is given in para 9, guys. Para 9. Let me read it now. Let me read it. Rest all remains same, guys. There is no change in it. Only 9 and 10 is the new thing. Let me read para 9. Activity of apportionment of co-insurance premium by the lead insurer to co-insurer for the insurance services jointly supplied by the lead insurer and the co-insurer to the insured in co-insurance agreement, subject to the condition that lead insurer pays the GST on the entire amount of premium paid by the insurer. So on this 4 lakh, GST is not applicable provided on entire 10 lakh lead insurer has paid the GST. That's all. Got it? Yes, sir. So if you want, I will write here. So on 4 lakh, no GST. No GST, because on 10 lakh, GST would have been paid by the lead insurer. Okay, so this is all about para 9. Next, coming to para 10, guys. Para 10 talks about the reinsurance. There is a difference between co-insurance and reinsurance. Co-insurance is two or more insurance companies jointly accept the risk. Jointly accept the risk. Whereas reinsurance is, assume I take the policy with one company, but they are shifting the risk with another company. I don't know who is that other company. I am just taking the insurance from one of the insurance company. Now anything I will communicate with them, but they cannot accept the whole risk because the amount involved is huge. So what they did was they reinsured it with some big insurance company. Clear? Yes, sir. So what is it? We will see. First, let us understand what is reinsurance. Reinsurance is a risk management practice where an insurance company called the insurer transfers part of its risk to another insurance company called reinsurer in exchange for a portion of the premium that insurer collects from its policyholder called reinsurance premium. This allows the insurer to manage its risk and financial exposure. The reinsurer often pays ceding commission, also known as reinsurance commission, to the insurer to compensate for administrative cost, underwriting and acquisition expenses related to issuing and servicing the policies. By receiving this commission, the insurer is compensated for the expenses and reduces its overall burden, making reinsurance financially viable. Generally, while paying the reinsurance premium, insurer deducts the ceding commission or reinsurance commission, whichever is his share, payable by the reinsurer. Sir, what is it? Let me explain. Again, I have made a chart for this also. Let me explain it through a chart. This is what is covered in para 10, guys. Para 10. Okay. Sure. Now assume VG classes takes the policy with whom? With safety insurance. That is the insurance company. Okay, we call them as insurer here. Okay, and I have taken the policy. VG classes has taken the policy for a huge amount. Okay. Now, VG classes has communicated, taken the policy, everything with whom? With safety insurance and pay the entire premium to whom? Safety insurance. But safety insurance didn't feel safer. They thought the amount involved in this policy is huge. Let me reinsure that with SBI. They are the better people to handle this. So what did safety insurance did was whatever policy VG classes has taken with them, they reinsured it with SBI. So SBI, I am calling it them as reinsurer. So you can see safety insurance transfers the risk to SBI and pays insurance premium after deducting ceding commission. Means, guys, listen. VG classes pays the entire premium to safety. But now, as safety insurance has shifted the risk to SBI, who should get the premium? SBI. But will SBI get the entire premium? No, sir. Because safety insurance is the one who got the client, collected the amount, and transferring the risk to SBI, right? So they should also get something. Yes. So that is called ceding commission or reinsurance commission, guys. So you can see safety insurer not liable to pay GST on the ceding commission because they're asking the reinsurer to pay the GST on the entire amount, guys. On the entire amount, you can observe here. The reinsurer, who is SBI in my case, is liable to pay GST on the entire amount of gross reinsurance premium before deducting ceding commission, guys. Oh, let me give it with some numbers so that you will have better clarity. Oh, assume VG classes took the policy with safety insurance and paid a premium of 10 lakh to whom? Safety insurance. 10 lakh premium, not policy amount, premium amount. Okay, sir. Even in my previous example, 10 lakh was a policy amount, Allah. It was premium. Assume policy amount was in crores. Okay, sir. So VG classes paid 10 lakh premium to whom? Safety insurance. So they transfer the risk to SBI. So premium also has to be transferred to SBI. Yes, but not the entire amount. Assume safety insurance is charging ceding commission of 2 lakh. So 10 lakh minus 2 lakh. They paid 8 lakh to whom? SBI. So 2 lakh is the revenue of whom? Safety insurance. Should they pay GST on it? No. They're telling they should not pay GST. But SBI has to pay GST on entire 10 lakh, guys. They have to pay GST on entire 10 lakh. That is the amount of premium before deducting ceding commission. Clear? So that is why they're telling this guy need not pay GST again. So on whatever amount of premium which VG classes has paid totally, that is 10 lakh. On this entire 10 lakh premium, who is liable to pay GST? SBI. That is the reinsurer. Got it? And on the ceding commission, safety insurance or the insurer is not liable to pay GST, guys. Hope you got it. Yes. Okay. Now let me read para 10. Services by insurer to the reinsurer for which ceding commission or the insurance commission is deducted from the reinsurance premium paid by the insurer to the reinsurer, subject to the condition that the GST is paid by the reinsurer on the gross insurance premium. Gross reinsurance premium is entire 10 lakh, gross figure. Okay. Payable by the insurer to the reinsurer, inclusive of the said ceding commission or the reinsurance commission. So whatever is the share of safety insurance is not insurance is there. No, we will call this as ceding commission or reinsurance commission. On that, are they liable to pay GST? No, sir. It is a part of Schedule 3. It is a part of Schedule 3, guys. Got it? Yes. Actually, it is not like completely out of GST. What they are telling is the person, whoever is the one who is ultimately bearing the risk, let them pay the tax. Clear? So on entire 10 lakh, the reinsurer is liable to pay GST. Okay. Same way in para 9, the lead insurer is the one who is liable to pay GST on the entire gross premium, guys. Got it? Yes. So please be careful with the wordings what they are using. Clear? I will just clarify. You might get a doubt now. Sir, what is the difference between this co-insurance and reinsurance? Let's see, the main difference between co-insurance and reinsurance is like this. See, co-insurance is like I went and approached both the insurance company to jointly take the policy under both of them. So both of them are jointly taking the jointly accepting the policy from me. Now, am I aware of both SBI as well as ICICI? Yes, they are jointly taking it. It's not like one person is accepting the risk and then transferring it to someone else. No, no, no. It is not like that. Got it? Both of them are jointly accepting the policy as well as the risk, guys. But one of them we will call it as lead insurer, who is directly handling with the client. Okay. Whereas the reinsurance is not like that. I will go and take the policy with one insurance company. But as they couldn't take the huge risk, what they are doing is they're shifting it to another company, which is called reinsurer. Clear? Did I approach the reinsurer? No, no, no. I approached whom? Insurer. I approached insurer. Now, as he couldn't accept the complete risk, what is he doing is he's reinsuring it with the other company, who is called reinsurer. Clear? So did I go and jointly take the policy with both of them? No, no, no. I took it solely with whom? Safety insurance. But as they couldn't manage the entire risk, they reinsured it with SBI, guys. Got it? Yes, sir. Fine. So you can just pause the video and go through this, guys, once. Okay, especially this examples, whatever I have tried to give through a chart, because you should get familiar with the words what they are used. Lead insurer, all those things, co-insurance, ceding commission, all those things. So please just pause the video and go through this example once. Hope you are done with this. Yes, go through this also. Yeah. Hope you are done. Let me proceed further. Yes, we are done with chapter 2 amendments. Yeah, now chapter 3. Guys, please be careful. I have not taken all the pages of ICI material. I have compiled the file only which includes the amendment part, which is given at the end of the respective chapter in ICI material. Okay, sir. Fine. So next amendment is with respect to third chapter, guys. These paragraphs are same. I am not reading it again. These paragraphs are same. It is given at the end of every chapter. So let us just straight away focus on what is amendment. So the amendment is with respect to section 9 subsection 1, guys, which is a charging section. Which is the charging section. What is it, sir? I have given it here. You can come to page number 29. Yes, sir. What is it, sir? 9 subsection 1 specifies, subject to the provisions of subsection 2, there shall be levied a tax called the Central Goods and Service Tax on all intrastate supplies of goods or services or both, except means on the following GST is not applicable, except on the supply of alcoholic liquor for human consumption, which was already there. Nothing new here. But from now, they have also added one more product here, and denatured extra neutral alcohol or rectified spirit used for manufacture of alcoholic liquor for human consumption. Guys, this is denatured extra neutral alcohol or rectified spirit is the raw material which is used in the manufacture of the alcohol. If these things are supplied to an alcohol manufacturer who is using this as a raw material in the alcohol manufacturing, which is used finally for human consumption by the human beings, it is completely outside GST. It is completely outside GST. So listen, guys, listen. If this is supplied for the alcohol manufacturing company as a raw material, which is used by the manufacturer in the manufacture of alcohol liquor for human consumption, then it is completely outside GST. So should the supplier pay GST on it? No. Now there might be a scenario where, sir, what if these items are supplied to someone else who is using it for some other purpose, not for the manufacture of alcohol? Will it be liable for GST? Yes, it is liable for GST. Yes, it is liable for GST. One more example. One more example. Assume guys, this is supplied by the supplier to an alcoholic manufacturing company who is using this as a raw material to manufacture alcohol, but not for human consumption. It is for some other purpose. In that case, not for human consumption. Assume it for some other purpose, industrial purpose. Is it included in GST, sir? Yes. That means it is liable for GST. It is liable for GST. So please listen, guys. I repeat again. Please listen. If undenatured extra neutral alcohol or rectified spirit, if it is supplied by the supplier for the alcoholic manufacturer for used in the process of manufacturing of alcohol for human consumption, then it is completely outside GST. Supplier need not pay GST on it. Sir, what if this is supplied for any other purpose? In that case, it is liable for GST. It is liable for GST. Hope you got it. Yes, sir. So this is an amendment under section 9, subsection 1, guys. Then same amendment is applicable even under section 5.1 of IGST Act. 5.1 of IGST Act. Same to same. Clear? Yes. Let me just read it once. 5 subsection 1. Subject to the provisions of subsection 2, there shall be levied a tax called Integrated Goods and Service Tax, that is IGST, on all intrastate supplies of goods or services or both, except on the alcoholic supply of alcoholic liquor for human consumption, which was already there. Now the new addition is, and undenatured extra neutral alcohol or rectified spirit used for the manufacture of alcoholic liquor for human consumption. Sir, what if it is not for human consumption? Then GST is applicable. Sir, what if it is not for the manufacture of alcoholic liquor? If it is for some other purpose, is GST applicable? Yes, GST is applicable. Got it? Yes. I will just continue. On the value determined under section 15 of CGST Act and at such rates not exceeding 40%, maximum IGST rate is 40%. As may be notified by the government on the recommendation of the GST Council and collected in such manner as may be prescribed and shall be paid by the taxable person, that is the supplier. Got it, guys? So please focus only on the red element. Clear? So whatever I have highlighted in red color is the only amendment. Rest all same, whatever we would have already covered. Okay, even here under that section, outside the scope of GST, same thing, guys, same thing. Okay, only alcoholic liquor for human consumption was excluded, but now there is one more new addition for us. Got it? Yes, sir. Next, we also have one more amendment in the same chapter under composition scheme. Come to page number 50. Come to page number 50. That is under the validity of composition levy. So last bullet point, guys. So if proper officer got to know that the composition supplier is continuing to pay tax under section 10, even though is not eligible, then the proper officer will have a right. Yes, what is it? If a taxable person has paid the tax under the composition scheme, though he was not eligible for the scheme, that is the composition scheme, either of the scheme, 10.1 or 10.2a, both, the person would be liable to pay penalty, and the provisions of section 73, 74 was already there. Now one more new addition, 74a. It is the new section which is added under the CGST Act, but don't worry, it is not a part of your intermediate syllabus, guys. So even 73, 74 was not covered for you in intermediate syllabus. Now they have added a new section called 74a. Even this is not a part of your intermediate syllabus. Okay, sir. And the provisions of section 73, 74 or 74a of the CGST Act shall be applicable for the determination of tax and penalty, which is given in section 10, subsection 5, guys. Got it? Yes, sir. So you need to just add that 74a, that's all. Fine, sir. So these are the amendments in chapter 3, guys. Yeah, you can see here also they are mentioned. provisions of section 73, 74 and 74A will be discussed at the final level. And for that, you have to pass through intermediate level. Okay. Next amendment is in chapter 5. Chapter 5 is place of supply. Chapter, one second. Sorry, yeah. Chapter 5, as per ICAI material is exemptions, but I have swapped it or I have interchanged it. So in my material, it would be chapter 4, guys. Chapter 4, sir. Yes. They've added a new section here. Please be careful, guys. I repeat once again. As per my study material or provision book, chapter 4 talks about exemption and chapter 5 talks about place of supply. Whereas in ICAI material, it is reverse. Got it? Yes. So what is this? We will see. That is, they have added a new section 11A. Section 11 talks about exemptions, guys, which gives powers to the government to notify any goods or services which is exempt from GST. Now they have added one new section 11A. What is it? First, let me explain it in simple terms. Then we will go through the section, guys. See, here we know the list of services which is exempt under GST. The goods list is not a part of your syllabus. Yes, sir. So, as a common practice or as a general practice, some industries used to assume that whatever they supply is exempt, especially in the field of agricultural or healthcare or educational. Guys, see, the major services provided by them is exempt, but here and there some exclusions are there. Correct. Now, if you do so and so supply, then it is liable for GST. Got it? Yes. But as a common practice or as a general practice, many people believed that, especially in healthcare and educational, that whatever they are doing is exempt. Whatever they are doing is exempt. For example, educational institution providing educational services is exempt, but they are also providing hostel accommodation. They consider that even hostel accommodation, whatever fees we are charging to the student is exempt. No, hostel accommodation is not a part of educational services. Clear? So all these people believed that. See, if a single consideration is charged to the students for both the education service as well as hostel accommodation, then it comes under composite supply. The principal supply would be educational services, so it would be wholly exempt. But what if educational institution is charging separate fees for the educational services, that is for training the students or teaching the students, and separate consideration for hostel accommodation? Then hostel accommodation is liable for GST. But what most of the educational institution believed is that even hostel accommodation is exempt. So they started enjoying the exemption, believing that they have the exemption eligibility. But later, when department sent them the notice telling, no, on this service you are liable to pay GST because it is not an educational services, they got panic. They got panic because not only one or two educational institution was following it. Majority of them was following it in a good faith, assuming, sir, we enjoy this exemption. So it was difficult for the department also to handle this because as an industry, they were following it in good practice or as a common practice. So what they did in the act was they gave power to the government. As per section 11A, they gave the power to the government, telling whenever a person was actually liable to pay GST, but they are not paid it in a good faith, assuming they enjoy the exemption. Assuming they enjoy the exemption, or else they were supposed to pay tax at 18%, but by mistake they have paid only 12% because they understood that what rate applicable for them was 12%. And they have done it in a good faith, not to manipulate the department. In that case, section 11A is giving power to the government to waive off whatever they were liable to pay in the past. Going forward, they are liable to pay GST, but in the past, whatever they were liable to pay but not paid, assuming they enjoy the exemption, they gave the waive off power to the government. So government can do it. Guys, please be careful. Don't assume they will give this waive off for everyone, each and everyone. No. Only if there is any misconception of provision or misinterpretation of provision by the industry as a whole, who are following it as a common practice or general practice, only then the government may come up with a notification telling, okay, fine, whatever is in the past, forget about it, going forward, please pay the tax. So this power is given to the government through section 11A. Yeah, let me read it. Power not to recover goods and service tax not levied or short levied as a result of general practice or common practice in the industry. Section 11A, which is a new section added completely. So a complete content I have given in red color, guys. Notwithstanding anything contained in this act, if the government is satisfied that, okay, who has that power now? Government. If government is satisfied that a practice was or is generally prevalent regarding levy of central tax, including non-levy thereof, or any or on any supply of goods or services or both, and such supplies were or liable to central tax in cases where, according to the said practice, central tax was not or is not being levied, or a higher amount of central tax than what was or is being levied in accordance with the said practice. For example, actually the supplier was liable to pay 18%, but they have understood that they have to pay only 12% and they have paid it. They are short paid. Okay. The government may, on the recommendation of the council by notification in the official gazette, direct that the whole of the central tax payable on such supplies, or as the case may be, the central tax in excess of that payable on such supplies, but for the said practice, shall not be required to be paid in respect of the supplies on which the central tax was not or is not being levied, or was or is being short levied in accordance with the said practice. Hope you understood. See, if you read this provision, there might be little confusions, but don't worry. I already explained it before I read this section. I repeat again, guys. I repeat again. See, nowadays, CBIC is coming out with a lot of clarifications through circulars. Clear? So there is clear-cut clarity. But in the year 2017, 18, 19, 20 and all, when GST was newly introduced, there was a lot of misinterpretation by the people, guys. Clear. And even CBIC didn't come out with any circular immediately. They came out with circulars, but in a later part. So, in the past, if people or the industry as a whole, if they have misinterpreted the provision thinking that they enjoy some exemption, even though they were not eligible for exemption, and they are not paid GST, or else they are short paid. And if it is relating to the past period, the government has the power to come out with a notification telling, okay, we will waive off that, don't worry, but going forward, please comply with the provisions properly. Got it? Yes, sir. Fine. So chapter 4 is done. Next is with respect to chapter 6, guys. Chapter 6. Chapter 6. Fine. What is it? We will see. Time of supply. One of the important amendment, guys. Time of supply. What is it, sir? Guys, before this, we have an amendment in the invoice chapter. Let us go back. I have already covered this. In statutory update discussion. Guys, see, I am making two separate video. I have covered the amendments from statutory update separately. Now I am covering the amendments from ICAI study material separately. I am doing this separately because you should not get confused. Okay, if I combine both of them and do it in one video, I know students will get confused. So that is why I am doing it separately, guys. But whatever I have covered it in the amendments from statutory update video, I am just giving some reference as there is a connection. Oh, guys, there was an amendment in section 31 subsection 3 clause F. What was it, sir? A registered person who is liable to pay tax under section 9 subsection 3 or 9(4) shall within the period as may be prescribed. Shall within the period as may be prescribed. And the prescribed time is given where, sir? In the rule. What is it? Within a period of 30 days from the date of receipt of the said supply of the goods or services, issue an invoice in respect of the goods or services or both received by him from the supplier who is not registered on the date of receipt of goods or services or both. Means when there is a supply from unregistered supplier to a registered recipient, when RCM is applicable, recipient has to do self-invoicing. Within what time, sir? Within 30 days. Within 30 days. Yes, sir. This is what we already covered. Okay. Now, there is an amendment with respect to this in time of supply chapter. What is it? Please pay attention. Come to page number 95. Section 13, subsection 3, guys. That is the RCM under services. RCM under services. And please be careful, there is no amendment in section 12. Amendment is only in section 13, subsection 3. Okay, what is it, sir? The time of supply of services under the reverse charge mechanism is the earliest of the following. What is it? Clause A. Date of payment, which is the earlier of. Date of debit in the bank account as reflected in the bank statement of the recipient, or the date of recording the payment in the books of accounts by the recipient. Payment entry, whichever is earlier. That would be considered as date of payment. Okay. Next, clause B. Date immediately following 60 days from the date of issue of invoice or any other document by whatever name called in lieu thereof. By whom? Supplier. Who is issuing the invoice? Supplier. And we need to take what, guys? Date immediately following 60 days. That means 61st day. 61st day. Okay. They have given some more extension here. In cases where invoice is required to be issued by the supplier. So even though RCM is applicable, but invoice was supposed to be issued by whom? Supplier. Then what is the time of supply? Clause A or clause B, whichever is earlier. Clause A or clause B, whichever is earlier, guys. What is clause A? Date of payment. What is clause B? 61st day from the date of issue of invoice by the supplier. Whichever is earlier. Who should pay GST here? Recipient. Guys, please be careful. Whenever RCM is applicable, we should think from whose point of view? Recipient point of view. So we are discussing the time of supply from recipient point of view, where supplier is the one who is responsible to issue invoice. Okay. So the time of supply would be what? Clause A or clause B, whichever is earlier. Sir, what if supplier is not the one who is in charge to issue invoice? Recipient has to do self-invoicing. Now we saw, if supplier is not registered, then recipient has to do self-invoicing. Oh, okay. So, recipient has to do self-invoicing. In that case, clause B will not be applicable. We should take A or C, whichever is earlier. Whichever is earlier. I repeat. If recipient is supposed to do self-invoicing, then the time of supply for the services which is taxable under RCM is A or C, whichever is earlier. So what is C? The date of issue of invoice by the recipient. In cases where invoice is to be issued by the recipient, that is self-invoicing, guys. But please be careful. Self-invoicing will not be applicable in all the cases of RCM, guys. It is applicable only when supplier is not registered. See, I will just give a clarification. Please listen here. RCM is covered in section 9.3 and 9.4, guys. 9.4 anyway is always from unregistered supplier to registered recipient. Okay. Only then RCM is applicable. Whereas 9.3, it can be few cases where supplier is registered or supplier might be unregistered. Whatever RCM cases are covered or notified under section 9.3, all the cases are not like supplier is registered or not registered. No. They have given what should be the supply of service, who should be the supplier, who should be the recipient. If all these three conditions are met, RCM is applicable. So there can be few cases where supplier is registered. In that case, who should issue the invoice? Supplier. Then, sir, there might be few cases where supplier is not registered but RCM is applicable. So who should issue invoice? Recipient has to do self-invoicing. Has to do self-invoicing. Got it? Yes, sir. There is also a proviso telling what? Provided that where it is not possible to determine the time of supply under clause A, B or C. Now the new addition is C. A, B was already there. Now the new addition is C. The time of supply shall be the date of entry in the books of accounts of the recipient. Okay. Let me explain again through a chart, guys. Guys, please be careful. Amendment is only in section 13, subsection 3. That is when the supply of services is taxable under RCM. If you ask me, sir, is there any amendment in section 12? No. Whatever we would have already learned in our regular class, section 12 will remain same. Amendment is only for section 13, subsection 3, guys. Got it? Yes, sir. Now, there are two scenarios, guys. There are two scenarios. Please pay attention. Just a minute. I will clear all this. Yes. There are two scenarios. That is, whenever RCM is applicable, let us see whether the supplier is registered or not. So, first case, supplier is registered. Registered supplier supplying the services which is taxable under RCM. Sir, even though supplier is registered, still RCM will be applicable? Yes, it can be applicable as per section 9, subsection 3, if all the conditions are satisfied. Now, recipient of services has to pay tax under RCM and issue payment voucher to whom? Supplier. He has to issue payment voucher to whom? Supplier, telling I have made a payment of so much. And time of supply will be earlier of clause A or clause B. Earlier of clause A or clause B. Clause A or clause B, whichever is earlier. Sir, is clause C applicable? No. Why? Who is issuing the invoice? Supplier. Supplier will issue invoice here. Supplier will issue invoice here. Got it? Supplier will issue invoice, guys. For whom? For the recipient. Clear? Okay. Supplier, okay, let me write here. And issue invoice. Okay. And issue invoice to whom? Recipient. But still, supplier is not the one who is liable to pay GST. In the invoice, you would have mentioned this supply is taxable under RCM. Recipient, please take care of it. Please take care of it. Okay, sir. So the time of supply for the recipient who is liable to pay GST would be earlier of clause A or clause B. That is the date of payment or 61st day from the date of issue of invoice, whichever is earlier, guys. Whichever is earlier. Hope you got it. Next. Sir, what if supplier is unregistered, sir? Second scenario. Supplier is unregistered. He has supplied the services which is taxable under RCM. Which is taxable under RCM. So in that case, the recipient has to pay tax under RCM and issue payment voucher for the supplier. And he should also do self-invoicing within how many days? Within 30 days. Where is this 30 days is given? In section 31, subsection 3, clause F. Clause F. Sir, what are you talking, sir? This one, guys. This one. Connections are there. Please learn in this way. Okay, yes. So if supplier is not registered, then the recipient has to do self-invoicing and pay the GST. And within what time the self-invoicing has to be done? Within 30 days of receiving the goods or services. Within 30 days of receiving the goods or services, guys. Clear? And here we are talking about services, so it is services. Okay. In that case, what would be the time of supply for the recipient to pay GST? It would be earlier of clause A or clause C, whichever is earlier. Clause B will not be applicable because here, who is issuing the invoice? Recipient and not the supplier. So if recipient is doing self-invoicing, then clause B will not be applicable, guys. Clear? And please be careful, as per clause C, we should not take the time limit. See, for the recipient, what is the time limit to issue invoice? Within 30 days. But here we are supposed to take what? Date of issue of invoice by the recipient for himself. Actual date of invoice we have to take. That is, on what date did the recipient issue invoice for himself? The time limit to issue invoice for himself is 30 days. But they are not telling within 30 days and all year. They're just telling whatever is the actual date of issue of invoice, take that. Got it? Yes. So you can observe your time of supply will be earlier of clause A or clause C under section 13 subsection 3, guys. Got it? Yes. Hope you understood. So first, whenever RCM is applicable for the supply of services, first check whether the supplier is registered or not. If supplier is registered, guys, we need to check if supplier is registered, who will issue invoice? Supplier itself. to the recipient. In that case, the time of supply for this supply of services is clause A or B, whichever is earlier. Whereas if supplier is not registered, then who should issue invoice? Recipient himself. In that case, what is the time of supply means? Clause A or clause C, whichever is earlier. Whichever is earlier. Hope you got it. Yeah. So please be careful. Here we will not take 31st day, 61st day and all. No, 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 no. Whatever is the actual date of issue of invoice. By whom? By the recipient. To whom? To recipient. By recipient to recipient. Got it? Yes, sir. Fine, guys. Chalo. And there is one explanation. Okay. One explanation which is given. Okay. I will just cover it together along with this only. Just a minute. You can see in chapter 6, this is the amendment. This part and clause C. Okay, this. So whatever I have highlighted here in red color, na, that is the amendment. Okay, yes, sir. Then I will just go to invoice chapter also. Just a minute. Invoice chapter, where are you? Yes. Yes. So invoice chapter, that is chapter 10. Chapter 10. Here also there is an amendment in section 31 subsection 3 clause F. What was it? What was it? We have already covered it along with the statutory update. Okay. So in clause F, it was like they have just mentioned within a period as may be prescribed. What is that time as may be prescribed? Is within 30 days from the date of receipt of goods or services. Okay. This is actually as per the rule. This rule in detail we have already covered in statutory update video. Okay, sir. But here there is one more explanation which is given. What is it? You can see whatever is in bold here. There's an explanation which is added newly. What is it? Let me read. This is a new thing. Please be careful. Explanation. For the purposes of clause F, the expression supplier who is not registered shall include the supplier who is registered solely for the purpose of deduction of tax under section 51. So here they told if supplier is not registered but recipient is registered who is liable to pay tax under RCM, then recipient has to do self-invoicing. In explanation, what they are telling is, guys, if supplier is registered but only to deduct TDS under section 51, but is not supplying anything, in that case, even though he is registered, but for clause F purpose, consider him as unregistered. Consider him as unregistered. I have given a here only in this chart. You can see. Assume this guy is registered. Assume this guy is registered, but only to deduct TDS. He is not providing any taxable outward supply. In that case, for section 31 subsection 3 clause F, even though the supplier is registered, consider him as unregistered. And if RCM is applicable, should recipient do self-invoicing? Yes, guys. As if this guy is unregistered. I mentioned here, you can see. This is as per the explanation. Okay, this is as per the explanation given under section where 31 subsection 3 clause F. Okay, this is explanation. Including person registered under section 51 for deducting TDS. Actually, they are registered under GST because whenever a person is supposed to deduct TDS, they are mandatorily supposed to get registered. But here they are telling if supplier is registered under GST only to deduct TDS, but they are not making any taxable outward supply. Even in that case, recipient, if RCM is applicable, he has to do self-invoicing. And the time of supply would be earlier of clause A or clause C under section 13 subsection 3. Got it? Yes. Even here, you can just pause the video and have a look into this. We'll proceed further. Done? Yes, sir. Okay, I'm going back. I'm going back. Okay. 6 we covered, that is time of supply. Now let us go to chapter 8. Chapter 8, guys. Input tax credit. One small amendment there. One small amendment. What is it, sir? Guys, under block credit, which is in page number 114, 17.5 I. 17.5 I. I have just taken only the part which is amended. 17 subsection 5 clause I. Okay. What is it? Any tax paid in accordance with the provisions of section 74, no credit for it. No credit for it, but only in respect of any period up to financial year 23-24. Only up to financial year 23-24. Sir, what if the tax is paid as per section 74 in the year 24-25 or 25-26 or any subsequent period? Is credit available? Yes, because that is what we can understand from this. Clear? Yes, sir. And also there were two more sections, 129 and 130, which is recovery sections, but they have removed it now. They have removed it now. That means what I can understand is if tax is paid as per section 129 or 130, if all other conditions are satisfied as per section 16, 17 and all, can credit be claimed? Yes. Previously, credit was not allowed. If you have paid tax as per section 74 or 129 or 130, they told no credit. Even if you satisfy all the conditions, still no credit. But now they have removed section 129 and 130, whereas 74 they have told it is there. Credit is not allowed, but only up to financial year 23-24. After that, is it allowed, sir? Yes. Fine. That's all about chapter 8. Next is 9. 9 is with respect to registration. There is an amendment in section 30, guys. The last section in registration chapter. Section 30. Come to page number 148. Okay. Guys, what is section 30 is telling is whenever the registration of a person is cancelled, he can request the proper officer to give it back or to revoke the cancellation. And what time he is having is within 90 days he can make an application. Within 90 days, which can be further extended by another 180 days. So that is who will make an application for revocation of cancellation? The person whose registration has been cancelled. Got it? Yes. So as per subsection 2, that is 30 subsection 2, now proper officer has two options. He can either accept the application and ask the registered person to continue with his registration. Means he will revoke the cancellation and allow the person to continue as the registered person under GST. This is the first option. Or the second option is reject the application and tell your registration is completely cancelled. We are not revoking it. But before he reject the application, he should give the applicant an opportunity of being heard. He should give the opportunity of being heard. Yes. Now there is one new proviso added here, giving the power to the government to add any conditions or restrictions. What is it? Instead of straight away studying the proviso, we will read the entire section 30 subsection 2 and read the proviso at the end. Okay. I repeat, guys. Whenever the registration under GST is cancelled of a registered person as per section 29, section 29 of CGST Act talks about cancellation. That is, as per 29 subsection 2, when proper officer has taken the initiative to cancel the registration of a registered person, once he receives the cancellation order, he will have 90 days plus 180 days time. That is 90 is regular time plus extension maximum 180 days to make an application for revocation of cancellation. And once an applicant has made the application for revocation of cancellation, section 30 subsection 2 is telling if the proper officer is satisfied that there are sufficient grounds for revocation of cancellation, he may revoke the cancellation of registration by an order within 30 days of receipt of application and communicate the same to the applicant. Okay, that the applicant can continue as a registered person under GST. Otherwise, he may reject the revocation application, means the cancellation will continue. But can he straight away reject the application? No, no, no. How can he do it? However, Before rejecting the application, he has to first issue a show cause notice to the applicant, who shall furnish the clarification within 7 working days of service of show cause notice. Okay. So he should give him the opportunity to explain, and after receiving the reply, the proper officer can take the final call. The proper officer shall disclose the application, accept or reject now, the same within 30 days of receipt of clarification, that is the reply to the show cause notice. So once receiving the reply to the show cause notice within 30 days, the proper officer can either accept or reject it. Okay, sir. But now they've added a new proviso telling, provided further that such revocation of cancellation of registration shall be subject to such conditions and restrictions as may be prescribed. Means government has taken the power to add any conditions or restrictions with respect to this revocation of cancellation. Got it? Yes, sir. This is the amendment part. Next is chapter 10, guys. Chapter 10, I already mentioned this. Okay. That is 31 subsection 3 clause F. Whatever is the amendment, we already covered. That is what is there. You can just observe here. 31 subsection 3 clause F within the period as may be prescribed, and also the explanation. Even explanation I have told. That is with respect to the supplier who is registered only to deduct TDS. Okay, sir. Next, 11th chapter. 11th chapter is with respect to accounts and records. So you can come to page number 161, 162, because there will be a continuation. Whenever I have mentioned two page number, that will be a continuation, guys. Yes. So there, under subsection 5, the small amendment is, guys, here section 73, 74 was already there. Now the new section also we have to take. 74, yeah, that's all. That's the only thing. Okay, rest all remains same, but I have given the complete section just to refer. Okay, but please be careful only on the amendment part, which is only section 74A. That's all. Just add it. Next is chapter 13, payment of tax. Payment of tax. Sir, what is the amendment in this chapter? Very big amendment. Very big amendment. So page number 174, 175. What is that, sir? In subsection 8, last point, we had 73, 74. Now you need to add 74A also. 74A also. You understood how big it is? Next, interest on delayed payment. Here also there is an amendment, guys, which is in page number 176. Here also the amendment is in the bracket, in the proviso. You can see 73, 74 was there. Now 74A. Actually, I have already covered this. I have already covered it in statutory update. But why I am mentioning here is because it is repeated here also. It is repeated even in this ICAI material. So 49 subsection 8 you can see only that is an amendment. Then in 50 subsection 1, that is with respect to the interest, 74A. Yes. Yes. So fine. These are the things. That's all. Rest all is same, guys. Next amendment is in chapter 14. TDS, guys. Come to page number 184. Yes. So what is the amendment? So here also small amendment in subsection 7. 73, 74 was there. Now add even 74A, guys. Add 74A. That is an amendment. Yes. Okay. The last amendment is in returns chapter, chapter 15, GST at 7. Actually, even this I have covered it already in statutory update. Yeah, I have already covered in statutory update discussion, which is in page number 205. Sir, then why again covering here? Because they are mentioned even in ICAI material, guys. That's the only reason. You should not feel that I have skipped something. No. So that is why I'm just mentioning in this reference amendment material. And I have also mentioned in Greek in color. You can see covered in September 2025 statutory update. Okay. Yes. So you can see they are mentioned here as an amendment. This was the last amendment, guys. Clear? So as per this, what is it, sir? Let me repeat it. Okay, take it. Another time I am repeating. So whenever a person is supposed to deduct TDS under section 51, he has to file GSTR 7 on or before 10th of next month. Assume in a particular month, he didn't deduct TDS throughout the month, that is from 1st to 30th or even 31st. He didn't deduct any TDS. Should he still file GSTR 7? Yes. Now he has to file GSTR 7, even if it is nil GSTR 7, guys, within 10th of next month. Got it? Yes, sir. Fine, guys. So this is all about the amendments from ICAI material. Hope it was helpful for you. All the best.